Hello, it's a summary June 6th. This is Rob Reinhold, and let's get into the market roundup. Well, let's get into what the market did today. It was a pretty flat day, but it was, again, as we've talked over the last week, it was sideways but volatile. And this was actually a really ugly candle for anyone who was hoping for a breakout to the upside. The morning had everything going for it. We had gapped up. We even had a little bit of a run into the morning, and then just within a couple hours, it completely fell apart. Now, here's the good news for anyone who was hoping for a bullish run. It had the potential today to become a rout, where when you lose a gain like that, a 1.5% gain, a lot of times, especially on a Monday, this can turn into a 1 or 2% rout to the downside. And the market's actually held in a couple of attempts to push it lower. As you can see here, everything we look at, the Dow return, the S&P, NASDAQ, Russell, everything was pretty much at zero, plus or minus a little bit. Oil and gold down a little bit. We take a look at the advanced decline line, pretty much 50-50. And we take a look at the heat map, and it's just, there is no strength here in any certain area. You've got some tech up, some tech down. You've got some banks up, some banks down. Even energy was mixed today. This was just a really sloppy, ugly day. I don't think you can take anything from today's action in order to forecast what's going to happen in the future. As I said, when we take a look at the S&P, this was an ugly candle. As I said, this day could have been a nice day. It could have been a nice green candle to where we start to challenge this up overhead resistance up here. And it failed miserably. The good news is we haven't plunged down below any key levels yet. This was our forecast over the weekend in the trading room, and frankly, nothing has changed. We said these are the immediate support and resistance points. Once one of those gets pierced, it's either going to be the 20 or the 50 period moving average. As you can see today, literally nothing happened. We just stayed in the range. We take a look at the NASDAQ, same thing. Simply in the range. So there's really nothing you can say about this day that gives you any indication of we broke out, we broke down. This is literally a nothing day. And frankly, as I said, fairly disappointing because the early morning looked pretty encouraging. If you also looked at the cryptocurrency market, it had a really nice bounce today. That did not translate over into any sort of enthusiasm for equities. To update our market outlook, there's really not much to update. We were at a 0 and a 0. Now look, that is not because we don't have the guts to make a call. That's literally the call. The call is, we're not going to go anywhere. And we think we might be stuck for the next couple weeks or maybe even the next couple months through the summer. Ultimately, there is no way technically to call where we're going to go next. This is still a longer-term bear market, and so if you had to place a bet, you would have to place a bet that the market does head lower. But over the next week, we think we're just going to be grinding sideways. If you remember on the weekend on the trading room, I said, I think this market is going to try to screw everyone over the next couple weeks. And what I meant by that was that I thought that the market was going to have these big runs, false breakouts, and then fail. And then break down and everyone gets back in short and then it rallies. Basically to where any directional position you take is going to be wrong and wrong with a lot of velocity behind it somewhere in the next couple days, only to have it go right back to where it was. So if that is your market outlook as well, which that is my market outlook, Darren's market outlook, I think you have to look at this market and say, okay, well, how do I trade in this market? As we said on the weekend, we thought the 2 to 3 week time frame was almost virtually impossible to choose. We don't think it's even worth going there. So we said you need to shorten up your trades or you need to lengthen your trades. You need to go out to July or you need to be taking a look at Friday. Because anything in that 2 to 3 week time period, it's going to be very difficult as we chop around. So there is nothing to update on our market outlook. Now, as we said on the trading room, we said that the market is messy. The overall broad markets are messy. Sectors are not messy. sectors are actually looking pretty decent here. So let's talk about some potential trades that we went over the weekend that actually triggered today. This is Unum. This is in the financial sector. And the financial sector actually did fairly good today. And you can see here, we got a breakout to the upside on a day where really nothing happened. This is what you want to see. You want to see on a day where the markets didn't really push anything higher or lower. You want to see your bullish stock say, I don't care what the market did today. I don't care that the market lost its gain today because I'm doing my own thing. I'm marching to my own beat and I'm going to break higher for 2.5%. So this is one that was entered, target of 38 on this one, short term. Antero Resources. This is another one we talked about in the trading room over the weekend. Talked about how we've got this nice high and tide ascending triangle pattern. Oil was down today and energy was mixed. Again, what you want to see is your bullish stocks say, I don't care. I don't care that the market lost its gain. I don't care. I'm still going higher because there's a big supply and demand imbalance on my personal name. So Antero Resources break out to the upside. I know I'm somewhere around like the 48 area on my target based on my time frame. So if you're willing to be longer term out, I think you can look at 50. If you want to be this Friday, I think you'd be at 47. I just think that's where you want to be on your targets here. As we said, we're not looking to stick our neck out on any trade here. We think the market is going to be treacherous and choppy and ultimately not go anywhere, but chop a whole lot of people up. The sideways trade we talked about over the weekend was Southwest Airlines. And the trade we talked about was the 2 weeks, so out to the June 17th strike. And it was the 40, 45, 50 butterfly spread. So pretty simple trade here. Basically 45 is that midpoint. Here's our risk graph. Anything above this line is going to be a profit. Anything below this line is going to be a loss. And our break evens are going to be somewhere around, like 46.80 and 48.20. So as long as it is somewhere in this area here, it's going to be a nice gain, and we've got 2 weeks to hold on to this. Lots of shorts triggered as well today. This is one we talked about. This is wayfair. This is what you want to see on your shorts on a day like today, where it actually gapped up and sold off and sold off and sold off and actually closed down near its bottom. This was a big move today, 2.5%. It doesn't look all that big because this is a very volatile stock. This was actually just a normal candle for this thing, 2.5%. But we talked about how we had a nice bear rally. We got our confirmation candle, definitely an entry today. We weren't going to be super aggressive on this. We were looking at doing the 55.60 bear call spread on this one. So this one looks good at the moment. Other than that, not a lot happened today. And so let's go ahead and kind of talk about tomorrow, because I think we're in for the same thing tomorrow, but I think it's probably the opposite, where we at some point are down 1.5%, and all the shorts are finally like, yes, I knew we were breaking down. I knew it was going to go over. Where they go ahead and get short, and then by the end of the day, the market has miraculously clawed its way back to being only down 0.5%. Expect this kind of choppy action. If you're trying to trade directionally, meaning I think I'm going to buy this thing at 50 and sell it at 55, or buy the call when it's at 50 and sell the call at 55, it's going to be rough. And so you better be very short term, or you better say, let me go out to July so I can sit through this next week of chop. And eventually that stock will go in the direction I want. So understand there are some strategies here that just will not work. It's not because you don't know how to read a chart. It's not because you don't understand the strategies. It's because the situation right now is it is not rewarding to swing trades. Swing trades where you're holding for a couple days to a week or two, those trades are not getting rewarded. And so if those are the trades you're making, don't be surprised when you don't get rewarded, because the market isn't rewarding those trades. You need to understand, where am I at the table? I'm giving a poker analogy. Do I have a good chance of this hand, or do I have a bad chance of this hand? To where you're playing the hands differently. If you have a good chance of winning a hand and the hand isn't that strong, you play it. If you have a strong hand and the table's just not good, like the table around you, there's a lot of the sharks are in and they've got big bets, you fold. You just fold and you go away. So understanding where you are in market cycles is so important when you're trading. So we expect this chop to continue. So don't be surprised if we get more of the same. We do get the Chicago PMI tomorrow, Case-Shiller Home Price Index. Again, those are likely to be, well, the Chicago PMI is likely to be okay. All the manufacturing numbers have been okay. Not great, but not terrible. Case-Shiller Home Price Index, we all know that house prices are way above where they were a year ago. That's not a surprise. What is going to be a surprise to some people is that we are slowing down on that rate of change and we'll probably eventually go negative on home prices. But that's probably not until next year when we compare house prices in 2023 against 2022. Consumer confidence as well, and really we're in the middle of earnings season, so there's really no earnings to even talk about. I wish I could say that it was an exciting summer Monday and that things were going to be moving and rolling, but guess what? At Maverick, we've had a long time saying here, trade the market in front of you. Not the market you want it to be, not the market you think it should be, the market that is. And right now, this is the market. So if that doesn't fit your trading strategies, go ahead and have a summer break. Just sit out for a while. The market will change, and when it changes, we'll change with it, and maybe your strategies will work best then. Thanks for joining me. Take care, everyone.